Hi, this is PR Sundar. Welcome to this special episode. What next for Nifty? For the last many months, I've been talking about Nifty 16K, Nifty 16K, and in fact, many people were not agreeable with me, and many people say coronavirus, second wave, third wave, Delta variant of coronavirus, economy not good, this and that. One of my friends kept on arguing with me, sir, what is good in India? Why the market should go up? And I told him, in India, nothing has been good even for the last 60, 70 years. From 1980 to 2020 also nothing good. But still Sensex has gone from 100 to 50,000. And what is your opinion about Japan? A good country, right? And everything is good, right? Very good roads, good transportation, so everything is good. India is everything bad, Japan is everything is good. But do you know that Sensex in 1980, it was 100, today it is 55,000. How many times? It's about 500 times. But Japan index, Nikkei, in 1980 it was 40,000 and now it is 25,000 or 28,000 or something. So even 40 years, the stock market return is less than zero, negative return. So what you see on the economy, outside picture, good houses, good cars, so it does not matter. And I always tell, a child can grow faster from 1 feet to 6 feet. But from 6 feet, the same child cannot grow to 36 feet. So there are so many things, but let me don't go to that detail. Now, Mr. Sundar has been shouting 16K. Now the 16K has come and it has crossed. Now it is trading around 16,300. Now the question is, what next? Is it 17K or 15K? And there are people who are still talking about Nifty 6K, 7K, 8K like that. And I'm going to put up some arguments why Nifty can go to 17K to 18K by the end of this December. Nifty has the potential to go up to 18K this year. So I'm going to divide my argument into three different parts. The first part, what happens when FIIs keep on buying? Here, I have taken the data from Money Control website. So, cash market, FII, rupees in crores. I have taken the data from last September. The last September, there were net sellers for 11,400 crore. And then after that, you see, December, January, February, March, like continuously, they were net buyers. So you can see 14,000 crore, 65,000 crore, 48,000 crore, 8,900 crore, 42,000 crore. And so then March month, it was almost nil. Then after that, they kept on selling. So you can see from October to February, so FII kept on buying the shares. But I've taken the Nifty chart from investing.com. You can see this is the closing of September expiry, and Nifty closed around 10,800. You can see on the right hand side the black color thing. So in September, when Nifty closed at 10,800, so what has happened to February end? The February end, you can see Nifty is almost 15,300. So from 10,800 to nearly 15,300, 400. That was a solid rally of 5,000 points in 5 months. October, November, December, January, February. 5 months, 5,000 points. It was almost 10% a month. Almost 1,000 points per month. That was the kind of rally when FIIs kept on buying. Now, if you look at this FII data, and after March, April, it was almost flat. Then April, May, June, July. So all these 4 months, they have sold. But look here, all the 4 months put together, their selling was only about 40,000 crore. There were some block deals. So include that block deals also, it can be around 48,000 crore. And what they've sold in the last 4 or 5 months, it was just equivalent to what they bought in December, just 1 month. Much less than what they bought in 1 month in November. So the markets, if you look at the chart, so from February, it was almost a consolidation. And now in the month of August, FIA, they started buying once again. The first trading session, they bought for more than 2000 crore. Second trading session also, they bought more than 2000 crore. And the third trading session, it is showing 700 crore negative, but the fact is that is because of some block deal. So it was actually net positive of about 300 crore. So in just 3 sessions, they have already bought 5,000 crore. So now my question is, what if FIIs continue to be the buyers for the next few months, just like from October to February? So Nifty do not have to move 5,000 point. Why Nifty cannot move 1,000 point? If Nifty move 1,000 point, it's already from 16,300 to 17,300. It's already more than 17,000. So that is number one argument. Number two argument, from February to July, despite FII selling in huge quantities, but the Nifty did not fall. Nifty was higher, but it was higher only 3-4%. And August, September, October, November, December, in 5 months, on an average, if Nifty shoots up by 1%, still Nifty can shoot up 5% by the end of December. The 5% from 16,300 is already about 17,200 or 17,300. I'm just talking about 1% move per month. That's quite possible even if FIIs do not continue to buy. And of course, if they continuously sell, it may be a different story. But sometimes they sell, sometimes they may buy, the market will choose to ignore. And the next argument is that more and more people, retail people, getting into very, very active in stock market. That is what is reflected from the share price of BSE Limited, CDSL and some broking companies' share prices. Until last year, I used to see the public issues are being subscribed by institutional investors first, and after seeing the response only, the retail people come on the last day. But look, this week 4 IPOs came, and all the 4 IPOs are runaway success, and within 1 hour, 2 hour, retail subscription is getting fully subscribed. So this shows that there is more and more participation coming from the retail segment. So even if FII is not buying or selling somewhat, that can be absorbed by the retail people. So this is first line of argument. Now coming to the second line of argument, most of the time people confuse themselves between market and Nifty. The market is about 7,000 stocks in India, and out of which NSE listed stocks are 2,000, and out of which 1,000 stocks are being actively traded, but out of which there are only 50 stocks in Nifty. So the Nifty may not be a true reflection of the overall market. I know sometimes in 2016-17, the mid cap and small cap index all were flying high, but the large caps did not do well. So when we say Nifty, what we are talking is only about the top 50 companies in India. But forget about the top 50. Look here. I've taken this data from the tickertape.in website and look at the constituents of Nifty 50. I click on the weightage now. So it is descending order of weightage. Reliance, HDFC Bank, Infosys, ICICI, HDFC, Bajaj Finance, Tata Consultancy, Kotak Bank. So effectively, like 1 or 2 years before, and all the stocks in Nasdaq index was moving leaps and bounds. And the people came out with this word, FANG stocks. FANG stands for Facebook, Apple, Amazon, Netflix and Google. So these 5 stocks had the huge weightage in Nasdaq. So these 5 stocks were outperforming. So therefore Nasdaq was doing extremely well. Now in Indian market, we can say Hrithik. So H stands for HDFC Bank, Reliance, Infosys, TCS, HDFC, ICICI Bank and Kotak Bank. So these 7 stocks out of 50 stocks, most of the people think 50 stock 100% weightage, people think, on an average each stock is 2%. That is only the average. But The Hirtik stock, I told you, the 7 stocks. These 7 stocks constitute 54% of the Nifty. So, the Nifty is going to do very, very well if these 7 stocks do well. And if you analyze these stocks individually, Reliance, when Nifty was around 11,000 in September 2020, the Reliance was trading around 2,400. To be precise, 2,369. But now, from 11,000, Nifty has come to 16,000 plus, but still the Reliance is nearly trading around 2,100. So that means it's nearly 15% lower. Just imagine a stock having 10% weightage. If that is 15% lower, that alone contributes 1.5% for the Nifty. So that means Reliance alone contributed to the fall of 250 points. 250 points in Nifty was wiped out only by Reliance. And again, look at the Kotak Bank. Kotak Bank in February, it was trading around 2000 plus. Now it is only trading around 1700 plus, which is again 15%. And Kotak Bank is having about 6-7% weightage. So 15% of that is 1%. So that means Kotak Bank has taken away 200 points from Nifty. Of course, TCS, Infosys all doing well. HDFC is also doing well. ICICI Bank also doing well, right? And in fact, HDFC Bank and HDFC was hugely underperforming for the last 2 weeks. And now in the last 2 weeks, these two shares have gone up. That is why the Nifty has gone up from 15,800 to 16,300. So, assuming that Reliance and Kotak Bank, they regain what they have lost, that alone will be adding to 400 to 500 point in Nifty. Then why Nifty cannot go to 17,000 or 18,000? So the first argument I showed you, when FIIs buy, what happens to the market. Second, I gave the argument about the Nifty is being dominated by 7 stocks. Out of that 7 stocks, few stocks have already contributed to the downfall of 400 to 500 point in Nifty. But despite that, Nifty is nearly 1000 point higher from February high. Now, coming to the third argument, the last few quarters, and India was affected by coronavirus, the lockdown, restrictions, but despite that, the companies can make good profit and the market can go from 7,500 to 16,300. Starting from now, for the next 6 months, the lockdowns are not going to be so severe. Restrictions are not going to be so severe. And for the last 1 year, 1.5 years, people were staying at home. And once the economy opens up, and there will be a lot of pent-up demand, people will like to travel because they get bored by sitting at home for last 1 year. When this people wanted to buy a car, why should I buy a car? The government says you must stay at home, you should not come out. Then why should I buy a car? Where I am going to go? If there is a marriage, only 50 people can attend the marriage. Then you are not going to attend any marriage. So what for car? So when the economy opens up, the people have reasons to buy car. People have reasons to buy a bike. People have reasons to travel. And the people have reasons to spend. So when the economy was completely under lockdown or with a lot of restrictions, when companies can do so well and the stock market can go so well, what if the next 6 months, if there are more relaxations, more opening up of the economy and pent-up demand from the people, so why the companies should declare bad results during the next 2 quarters? From now to December, so there are 2 more quarters of results are due. So if these 2 quarter results are good, just look, HDFC declared a very good result and shot up more than 10% in 1 week. And of course, HDFC Bank did not declare the good result, that's why it fell. Reliance did not declare good results, that's why it has fallen. But ICICI Bank declared good result, it has shot up. So during the next 2 quarters, if the company is set to declare good results, then definitely these stocks will move 5%, 10% higher. That can take even Nifty to 5 to 10% higher. So therefore, what I am trying to tell you, the bull trend is still intact. Don't believe the people who are the doomsayers. Nifty will be coming to 10,000, Nifty will be coming to 12,000 and this and that. And there are people always say a gap must be filled, gap filling in technical analysis and mean reversion. Somebody was saying Nifty has gone from 7,500 to 15,000, mean revision it has to come to 11,000. But why not the real estate prices? One of my friends told me he bought an apartment for 1 lakh in 1965. Now the price per square foot is 1 lakh. That 1 lakh has gone to 10 crore, right? So 1 lakh has gone to 10 crore because of mean reversion. Do you think the same apartment price will be coming back to 5 crore? So why only in stock market we have all kinds of different hypotheses, something like gap must be filled or mean reversion and this and that. Right now I'm bullish, and people will surely comment, sir, why do you say right now I'm bullish? You are always bullish, right? So that is the nature of stock market. In the long term, they are likely to be higher. They are not likely to be lower. So here and there, somewhere some problems comes, so the markets may come down, but the inflation never comes down. Inflation only goes higher. Your salary never comes down. Salary only keep going higher. So real estate price never comes down. It only keeps going higher. Then why only stock market has to come down? So let us see what happens in the next few months. So hope you enjoyed watching this video. Thank you for watching.